right, my hope is that no matter how familiar you are with NAV or Business Central, I'll be able to give you at least a few tips on how to do things more efficiently, or maybe something you're even missing. These are best practices, which means that maybe you're not doing all of them, but it might be something you should consider. Since there's not really a month-end close, I'm going to start with what is typically done at month-end, and that's going to take up about the first half of this, and then I'll get into the year-end. Some of these activities may not be done every month, but I would recommend that you at least do them at year-end. So here's the checklist that I'll be sending out. And I'm going to start with the activities that apply to most, if not all, of my clients. The first thing on the list is control your allowable posting dates to prevent errors. What I mean by this is everyone can make data entry errors. And in order to prevent that, you want to set up allowable posting dates. And the first place you do that is in the general ledger setup. This is my search feature. I'm going into general ledger setup. Typically, if I were closing December, I would have the allowable posting dates now to say from January 1st to January 31st, because that's what I want most of my users to be working within. It doesn't have to be for everyone, but you do want to set it for most of your users, because then I'm going to show you where you set your exceptions. But if you set this properly, then it will keep people from keying outside this date range. And I will tell you, this is pretty important because NAV BC will allow you to post into any month in any year. So I have seen, for an example, someone who posted a payables invoice in the year 2032. NAV allowed that. It also allowed her to go ahead and pay that invoice in payables with a current check. But what she resulted with was an aging that had a negative balance on it, which she couldn't figure out why, as well as a few other discrepancies. So you want to control your posting dates just to keep people from making key punch errors. So I set this to January, but what about your accountant who's still working on December? We're closing December, but they're still there. From there, you go to your user setup. And in user setup, not all your users have to be in there. This is really just the users that need special permissions or rights. So I'm going to set up myself, and I'm going to say that this is an exception. In myself, instead of being allowed just January, I'm going to be allowed from the beginning of December through the end of January. I might even put that into February, whatever I'm currently working in. I do want to keep this closed down for myself also, because I can make mistakes in addition to someone else. Since this is where you set exceptions, you can set somebody with a more limited date range too. So if you want most of your users to be able to work in this month and next month, but you've got someone who's prone to key punch errors and you want to limit them to this month, you can do that too. So what about someone who has been doing this incorrectly by coming in here every month and setting up all 30 of their users with their allowable posting dates? You can get around that. Come in here, delete the allowable posting dates for all the users, and then it will default to what you've got in the general ledger setup. You don't have to come in here month after month. You just come in here for the exceptions. All right, I'm going to show you my list again here. And this list, I'm not going to hit everything. So for example, I'm not going to talk about the next 3 items, because really the next 3 items are just reminders to get all your processing done for the month before you start your close. So get all your invoicing in, complete your sales, etc. I am going to talk about reconciled bank accounts real briefly. The first thing I would do if I were closing the month is I would go and I would run a trial balance. I'm going to warn you on search features. If you type in just a few letters, which is all you need, If you just hit return, it's going to go to the first thing that it suggests. And in this case, that's a spreadsheet, which is not what I want. So I'm going to drop down here and say I want the trial balance. I want to see my actual balances, and I want to see them as of December 31st. You can see that with all these variations, I can make this report accomplish several reports for me. At this moment, this is what I want. And hang on just a second, I need to move something so I can see everything on my screen.
You can just hit that hide just right next to where it says stop sharing.
Thank you very much, Ben. Okay, so this is my trial balance now. And for a lot of companies, they are required and would be required if they were audited, well, at least with an in-depth audit, they would be required to prove every account on the balance sheet portion of the chart of accounts. So they would need a bank reconciliation for their checking account. Any other bank accounts that they might have on here, they would need a reconciliation for. They'd have to prove receivables, etc. Petty cash obviously is wrong on this, but I'm working with the testing database that I was given, so it's going to have some things that don't look exactly right. So I'm going to show you how to prove a lot of these accounts. Right now, you can do them within BC or NAV. So I'm going to set this aside. I could print it out, or I could save it to PDF. I've got mine saved to PDF, so I'm going to move on here. Now that I got a balance for my bank account that I'm trying to reconcile to, there is a bank reconciliation program within NAV, and hopefully most of you are using it. If I were getting started here, I would say I want to do a new bank reconciliation. I want to do it on my checking account. I might have more than one. And then from here, I can have the system suggest the lines. So it will pull in for whatever date range I want, all the checks, all the deposits, all the adjustments that have been made to this bank account. I can also, if I'm set up properly, import the bank statement from the bank. And then I can let the system start by doing an automatic match where it tries to clear all the checks that are both on the bank and in my statement lines. Whatever doesn't get matched, or if it's matched incorrectly, I can remove the match, I can match manually. But this is a very fast way of doing a bank reconciliation. And then at the end, when you're ready to post, you can get a nice printout of your bank reconciliation. If you aren't doing it currently within the software, I'm going to recommend you ask your support personnel to help you learn how to do it. There is a little bit of setup involved in making sure that you're using a bank account rather than posting directly to the general ledger account. And if you are not using the software, still be sure and do a bank reconciliation outside of the software to prove that balance. Okay, moving along here. The next thing on my list is to reconcile my receivables and payables. And all I really want to say about that is that you want to use your receivables trial balance and your payables trial balance. I'm going to show you something here. That didn't work. Okay, I tried receivables trial balance. It didn't know what I was talking about. If I were in customers and say a receivables trial balance, okay, I thought it did. That's one of the things about the system. You need to know what it is you're looking for. So in this case, I'm looking for my customer trial balance. That's what it's actually called. And I would come here. I can print this by posting group. So if you do have more than one receivables account set up on your chart of accounts, so maybe you have a domestic client customers versus international, you can print this particular report by posting group. I'm going to say that I want it as of December 31st, same as what I ran my trial balance for. I'm going to preview that. And here I get every customer listed and what their ending balance is. Now, I'm going to point out, you probably didn't notice, but on my trial balance, let's see if I can bring that back up here again. My accounts receivable balance was $72,000. On this report, it's $70,000. I'm out of balance. That 99% of the time when that happens, that means somebody has made a journal entry directly to the general ledger account without going through the subledger. And that's an absolute must that everybody needs to have drilled into their head, is that if you want to make a change to receivables or payables, it needs to be done through the subledger, which will then feed into the general ledger. But you need to reference a customer in order for it to adjust a customer. So if this is run every month, which would be my recommendation, then it's pretty easy to go and identify where am I out of balance between the general ledger and my subledger. You make that correction and then you move forward. So that's, I also want to mention that the reason I said you want to use a trial balance, I know some people use their aging in order to reconcile. All I'll say on that is that occasionally, well, first of all, if you're using more than one currency, it will not balance. And occasionally there are things that won't get picked up on one or the other. So I recommend that you use the trial balance rather than the aging to do your reconciliation between the two. Okay, moving along. The next thing on my list is something that actually, although I put it here on the list, you probably are not going to do for a while. This is to post your adjusting entries for the year to be closed. The reason I put it here would be because there may be a few of you who have your CFO in-house and everything is going to be completed before you do year end. But that's really pretty rare. Usually most people will send this out to a CPA firm to be audited. And when they have finished with it, they'll come back and they'll say, okay, I want to write this balance off, or we need to make this adjustment here. We need to change the depreciation method on some asset. So they'll come in with their changes. You can and should go ahead with closing your year before you have these posting entries. I'm going to show you at the very end of the webinar how to make those adjusting entries when they come in, and they can come in months from now. So next on the list is my 1099 vendors. Obviously, some vendors need to be printed a 1099, just like your employees need a W-2. If you go into your search bar and search for 1099, it's going to come up with the forms that can be printed. If you set your vendors up as a 1099 vendor, then the information will be there to print. I want to point out that at this point, the one that's missing is the 1099 NEC, or non-employee compensation. That's a new 1099 that the IRS has asked for this year. They're breaking things out from miscellaneous. At this point, Microsoft has not come out with that new form. I'm under the understanding we are to get it before the end of January. So if you do print 1099s and you need that form, you need to make sure that your support person knows that, so they can get you on the list to get the update when it comes out. If you are using a third-party software, and I know that because of this need to update forms, there are some people out there who use a third-party software. When you do that, it usually means double entry. You have to enter those vendors and balances in another software, but at least you don't have to update Business Central. And this, by the way, is not an issue for anybody who's on the cloud hosted, because Business Central gets updated automatically every time a new update comes out. So for those that do need it and choose to use a third-party software, I would recommend that you at least use this system for getting the information. It's just so much easier because if you set a vendor up, I'm going to go to my vendor list, and if I set a vendor up to be a 1099 liable, which you'd come in here and put your 1099 code in here. The system comes with a lot of different ones that you can choose from. I just say whatever they are, interest or non-employee compensation, whatever. It will then, when you post an invoice to that vendor, it's going to set them up, that invoice up as being 1099 liable. On each individual invoice, you have the option of saying, no, this particular one is not, or breaking it apart partially so that, for example, in the case of somebody who's doing something on time and materials for you, the time is 1099 liable, the materials are not. So all of that can be tracked. Then at the year end, you can search for the vendor 1099 information. And I will tell you, you do, by the way, have to be on the vendor list to find this. Most things you can search from anywhere, and BC or NAV is going to find it wherever you are. But there's a few things you have to be in a specific place to search for it. So here's my 1099 information. I can print out all my vendors and how much was paid to them. It doesn't matter if you've posted an invoice if you've not paid it yet. So you can print out a report that will show you the vendors, what category they're listed in, and what you have paid them in this year. So you could then take this information and use it in your third-party software. Back to my list. Financial statements, there's really not a whole lot to say about that, just that you want to run any financial statements that you might need for yourself or for your bank at year end, and I've made a few suggestions here. Part 2 here, I'm going to go into activities which are going to vary depending on what modules you're using, and I'm not going to talk about all of these because there aren't very many of you that are on, well, matter of fact, I don't know if any of you would be on all of them. So each of you are going to use one or two of these. You'll get this list. These are suggested items you might want to consider doing before year end. But I am going to hit on a few things. One, because I see it happen, is the job status. You want to complete all jobs that are finished within the year, but this may require postponing closing the year, because you need to make sure, depending on the work in process method that you use, that all invoices, costs, billing, etc., has been posted to the job before you set it to complete. For example, if your work in process is completed contract, it's going to recognize all billing and expenses at the time of completion. And so you need to make sure everything's posted in there. Okay, there are several items on here relating to inventory. I'm going to talk a little bit about them because a lot of the clients use inventory. You do want to do an inventory reconciliation as of the end of the fiscal year. This is, again, part of proving those balances on your trial balance. I'm going to say that running the adjust cost to post cost, a lot of clients are not familiar with this because they've got it set to run automatically. So all I'm going to say is that I have seen cases where items have gotten missed. So in order to make sure that everything is getting adjusted, it's a good idea. I would say run this monthly. But at least at year end, you want to run this adjust cost, and notice this post to GL is part of it. You can turn that on so it's not a separate step. But you want to run this to make sure that everything has been adjusted in your inventory costing. As far as the inventory reconciliation goes, I will point out one caveat on this, and that is you cannot reconcile to the exact dollar your inventory if you're using average costing. I'm also going to say that if you're using average costing, you really should be talking to your support person about getting off of it. It is not a good method anymore. It used to be a great method back when people used manual accounting systems, so that you didn't have to keep track of all the various inventory layers, that I got 6 of these at this cost and 100 at this cost, and which one do I want to cost when I'm making a sale. You just continually averaged everything, and you didn't have to keep track of that detail. That anymore, that now causes problems within the software because it does just that. Even if you go down to a balance of 0, it's going to continue trying to average your costing. So I would recommend getting off of average costing. As far as how to reconcile, you want to use the inventory, and not the inventory valuation, but the inventory reconciliation. There is an inventory GL reconciliation. You put in the date that you are, and that's not what I want to do. I want to do the other one. So this is going to be a report that will give you the data. There's going to be, I'm not going to go into exactly how to reconcile because there are 4 different columns that need to be reconciled to 4 different numbers, but this will be the data that you need to prove your inventory balance account figures. Notice that you can do this again by inventory posting group, so that if you do have different inventory accounts on your general ledger, you can run these reports to balance to each of those. Let me catch up on my notes here. Okay, next on my notes is the inventory valuation. The inventory revaluation. For some companies, some industries, you're allowed to revalue your inventory as part of your year-end process. If your industry allows that, I suspect you already know that. And this would be the time to do it. You can also use this to correct errors. At this point, I'll just say you'll use the inventory revaluation journal to assist with the process. And if you have standard costing, you'll use the standard cost worksheet. If I tell you anything that you feel you should be doing, but you don't know how to do it, contact us later. We'll be glad to help you through the step-by-step process. You may be able to figure it out on your own just from what I've said here. The last thing that I would do with inventory is run the inventory valuation report. It can give you some, point out some other errors that may have happened within your inventory. This report is a very lengthy report and it's slow, depending on how many inventory items you have, of course. Because it takes a while, I'm going to recommend that you run it overnight. You could print it to PDF. You don't actually have to have a physical copy of it, but if you print a PDF, you'll be able to refer to it to make corrections or in the future if you need to. I have closed inventory periods on here. Don't worry if you don't know what that is. I don't know that I have any clients that are using inventory periods, but you can have inventory periods that are not the same as your fiscal periods. So I'll just say that. If you need to do it, let us know. The rest of these are pretty straightforward. There's a fixed asset module for you. If you've got your fixed assets set up in there, you can be calculating depreciation and you'll want to do that. Just some other reports suggested depending on your business as to what you might want to be running. So that's the first half. I am going to ask that you hold any questions until the end. That way, people who don't have questions are welcome to drop off the webinar, but I will take some time for questions at the very end. So that covers the things you should be thinking about doing at month end if you don't already. And from here, we're going to get into year-end close because that's the part where you haven't done it for a year and you've forgotten what you need to do. First thing you need to do is take a before year-end close backup. Your IT department or IT company, if you use an outside company, should have a regular backup procedure in place. You need to make sure that they do and that those backups are going off-site. Off-site can be the bank, put it in a safe deposit box. It can be somebody takes it home with them. But in case of a fire or some other type of an emergency, you don't want your backup stored with your computer system. If you're on BC Cloud hosted, those backups are done automatically. You don't have to worry about it. But I also want to take a moment here to point out that there's something else that I didn't put on here, but you should consider at year end, and that's testing your disaster recovery system. That means if you were to have a fire or if you were to be hit by ransomware, do you have a plan in place for what it would take to get back up and running? I know we've had a couple people hit by ransomware this year, and I know one of them was back up and running, billing their customers within a day. And that's going to be vital for some companies. So make sure you get good backups and that you know what to do in case of a disaster. Okay, as far as closing the year, the first step is to verify your accounting periods have been really set up for the next year. Now, if you type in fiscal periods, this system, I love BC because they put in some artificial intelligence, I guess is what you'd call it, to recognize what you might be looking for. So I typed in fiscal, the program is actually called accounting periods. It found it. So I go in here, and oftentimes what you're going to find is that next year has already been set up, but that is because you may be trying to work in next year in advance. You might be putting budgets in for 2021 already, even before you've gotten to year end. But this would be a good time then to create the following year. So the system does need to have the process set up so it knows what buckets to put your transactions into. So I'm going to create the next year. It doesn't start as of December 1st. It starts January 1st, and I've already got 2021 set up. So it's going to be 2022. Number of periods, I can have whatever number I want. I can have 12 monthly periods, which is what I've got it set up for now, or I could have 13 4-week periods. I could have 4 quarterly periods. You can set up your fiscal year to have however many periods you want. So I'm going to tell it to create 12 one-month periods. And it does that. And here I now have 2022. Notice that it's got January on here as the first of the year because I told it that's where to start when I created this. So what happens if halfway through 2021, your board of directors decides they want to go to a fiscal year that starts in July and runs through June, and they want you to make that change. They want you to do a short year and then switch over. You can come in here, and I'm just going to get rid of the last half of 2021 and 2022 at the same time by just going through here and selecting all these. If I had wanted to select everything, of course, just in case you don't know, I could come up here and up at the top say select all. I don't want all of them. I just want them from that point down. And I'm going to delete them. Go ahead and delete them. And now I'm going to run a new year, create new year. And I'm going to say start July 1st of 2021, do 12 monthly periods because I'm going to have a new fiscal year that's 12 months. And I know what I did. This will just take a second to get back there and I can tell you what I did. I said the starting date was July of 22, and it should be July of 21. And there we go. Now I've got a new year that goes from, okay, I'm going to have to look at what I did. I think I must have, I think I should have deleted some of these before I recreated. What I should have had, and I could if I took another couple minutes, would be a year that showed a start in January and a start in July. And that's what I would want for a short year. As you see, it only takes a moment to make these type of corrections. After you've created the year for what you want, the next step is to close these months down for the year that you're closing. Notice up here, 2018 has already been closed. In the older versions, it didn't require that you do this, but in the newer versions, you have to do this before you can close out your income statement. And this does, well, all it really does is it locks your period. So up until, as I said, I could come down here and delete and restructure my periods. Up until the time that I close them, I can do that. By closing them, it makes things run a little bit faster. So I'm going to go in here and I'm going to say close the year. It knows that January was the last year to be closed. It's telling me, do I want to close this, 18 was the last year to be closed. Do I want to close 19? I'm going to say yes. And it now has set these months to being closed and the date is locked. So I can no longer change this year. I've accepted this as being my fiscal year. Once these steps are done, then I can do really what's more the accounting portion of it. I'm going to go to close the income statement. It suggests that I'm going to close as of 19, and then it wants a journal template and batch. Using the general template is just fine. I personally would create a separate batch just to kind of keep things separate for year end. So I'm going to do that real quickly. This is my year end batch. That's why if someone else was out there and happened to be doing something at the same time, I wouldn't get batches combined here. So I've got a separate year-end batch. I'm going to say okay. I told it that I wanted to assign the document number. The document number can be whatever you want it to be. As a matter of fact, you can let the system assign it and it'll just go through 1, 2, 3, 4. You might want to put in, for an example, if I was closing and I was closing in the middle of February is when I got around to closing my year. I could put in here just to have a reference that I closed 19 on February of 15th of 2020. As I said, it can be whatever you want it to be. Retained earnings account is the account that has been designated on your equity portion of your chart of accounts to be where the retained earnings for this year, all the profit or loss for this year is going to go. And then this part is pretty important. Do you want the balance or the details? Closing the year does not delete any detail from within your system. You still have all the invoices, all the detail that went on the invoices. You can go back and look at things in detail. What this is asking here is, when you post the retained earnings account, do you want to see the offsetting journal entry that was created for every single income and expense account? Or do you just want to see the balance for your total profit or loss? I think balance makes more sense for me. I'm going to say balance. Just a comment here, in case you're using dimensions, you have the ability to close the income statement by dimensions. Again, hopefully you know what that means if you're using it. If not, contact us. So I'm going to say okay, and it's going to go ahead and create a journal entry. Notice it says created. It does not say that journal entry has been posted yet. So the next step in closing my year is to go over and look at that general journal entry. Comes up default. I don't have any journal entry. That's because I'm in the default batch. So I'm going to come up here and say, I want to go look at the year-end batch. And here's my closing journal entry. So for every income and expense account, it posted an offsetting account, a balance to make so that it will now become 0. And then I have one line for in my retained earnings. Had I said detail, I would have an offsetting line for every single one of these accounts. The last thing I want to point out here is notice it's got a posting date of C/12/31/19. That's pretty important. Don't mess with that. It puts your closing entry kind of in a limbo between December 31st of 19 and January 1st of 2020. That way your closing entries don't show up on any report. So if I run January, I'm not going to see it. If I run December, I'm not going to see it because this actually took place in that magical time between December the 31st and the 1st. When you're certain this is correct, and really you shouldn't be changing any of these income expense amounts because that is the balance in there. What you might do is, let's say you have multiple retained earnings account, maybe break it out by partner or something. You could be coming in here and making changes to that. Otherwise, you really shouldn't make any changes to this journal entry. You'd just come up and you'd say post or post and print. Notice it's my posting dates, not in my allowed posting dates. So I need to go back to my user setup and allow myself to get into 2019 since this is what I have set up for. I'm going to pick any date here in 19 and allow my posting into 2021. And then I'll come back here and I'll post. And then, of course, you need to remember to go back to your user setup and lock yourself back down again so you don't make mistakes and go in and post something to the prior year because you are allowed to do that. And I'm going to talk about that at the very end here. So you post your journal entry. Now you might want to run another trial balance. Same place as you did earlier, only this time you should see 0 in every revenue and expense account. And your retained earnings would have the prior year profit and loss posted. That finishes what you would do at year end. I have a few other things on here just as reminders that, hey, you might need to be getting your budgets in there for the upcoming year. If you've got forecasts, you might want to put them in. Some people have price increases at year end, or their vendors have cost increases at year end that you may need to run the processes to update those. Number series changes. Probably a lot of you do not do this, but I'm going to talk briefly about the number series and what it does. It's called number, but it's NO. Keep in mind that's the abbreviation for number. The number series is used for anything that needs a number. So when you go in and you start a new invoice, it may either automatically suggest an invoice number or you might be allowed to type it in. That's all controlled here. But where you might want to make a change is say that your year end or your year number is part of your invoice numbers. So I want the system to start over again, and I want it to include 21 at the beginning of my invoice numbers. So by changing my starting number here, then it will start my new numbering series for me. Or you might want to change it so it starts back with number 1 again. If you want something, whether it's invoices, checks, whatever it is that you might want to change your numbering series, this would be where you would control it. And the time to do it now. Actually, to tell you the truth, the time might be before this point. because you want to make sure your number series are in place before anybody starts posting anything in January. So although you may not get around to closing the year for days, weeks, or even months in some cases, your users have to be allowed to get started on the new year. So you may want to push that number series update further up in your notes as to when it needs to be done. Let's see here. Okay. Be sure you also, I'm big on backups, as I said earlier, take an after year close backup. And these after activities, these are just some suggestions. You might want to set up new recurring journals for the new year. Recurring journals are great. Anything that happens every month and either the amount is the same or a calculation is the same, should be set up in a recurring journal. You can then post everything with one step. You go to your recurring journals, you call them up and you post them. If you don't know how to use those, again, contact us. Clean up excess documents. The only thing I really want to say about that is sales orders and purchase orders do not drop from the system unless they have been fully shipped and invoiced. So what happens when you have a sales order and after partial shipments, you determine it's never going to ship the balance? This is a good time to go in and make sure you don't have any hanging out there. You would look at your sales orders, and what you would need to do is change the original order quantity to being whatever got shipped and invoiced. And then at that point, you can delete it. Now, you can do this one by one. Again, I hit return too fast, so I didn't get my list of sales orders. But you could do this one by one, changing the original quantities to match the shipped and invoice. But there's also a program that will delete all of these at one time. If you go in and just search delete, you can come up and see all the things that you can delete in a batch. So you can go in and delete your invoice, sales orders, purchase orders, etc. And this is a good time to just do that type of cleanup so you're not carrying over from year to year things that really don't need to be on your books at all. Okay, very last thing I want to cover is what do you do when you have prior year adjustments? So I said very early on that a lot of these adjustments aren't going to come from months down the road. When your CPA gets done looking at things, hopefully before they file taxes. So again, you want to take another backup, but at this point, on a second, you need to open up your user dates so that you can go back in the prior year. I have that right at the moment, but hopefully you're keeping your user dates closed down. So you need to open up that you're allowed to go back in there. And then you just go in and you post a general journal entry, just like any other journal entry. And as long as your allowable dates allow you to, you can go into a specific month if you would like to, so that you can rerun financial statements for that month. Most people post these closing entries, just do it to December 31st, but you can do whatever you like. You just put a normal journal entry in there and you post it. Then the thing that is important is that you need to reclose the accounting or the profit and loss, the income statement. You do not need to reclose the year. The accounting periods are locked. All you need to do is close the income statement again, and it will create a new journal entry just like it did before. You might want to call this year-end adjustments and the date that they're put in, and run this and post the journal entry again. Most people will not be going back more than 1 year. They close the prior year. In those rare circumstances when you have something that might be multiple years old, you can do that. You can go back into whatever year you want and make your adjusting journals. I just want to point out that every year after that needs to have the income statement reclosed. So if you go back into 2017 and make an adjustment, you will post that adjustment. You will then close 2017 and post that journal entry. close 2018, post that journal entry. You get the idea. You have to close each year after the adjustment was made. Be sure and set your user dates back at this point so that you don't accidentally get in and post something to the prior year. Take a new after year-end backup, and that is it. That was a very fast review of the year and month processes.